Three stocks I'm buying in March during the 2020 market crash. First, Dividend stock. What's up, everybody? Doriso here. To all the new subscribers, welcome aboard the journey from zero to infinity. I'm glad you're tuning in for this episode, episode 18, as my co pilot on the journey to building wealth and growing a stock portfolio with no cap. If you're looking to grow your investments to infinity, as well, especially with recession talks going on and the stock market crash that's going on right now into March 2020, click the like button. I'd be interested to see if we could get that like counter to hit infinity. Time will tell. Let's get straight to it. Since I'm just an individual investor looking to grow my stock portfolio from scratch to as high as possible and as soon as possible, I'll be discussing three stocks I'm buying in March 2020 that are currently in my YouTube stock portfolio on your screen. I'm not a huge fan of videos recapping stocks that are just on my research board. Between me and you, there are many ideas on the board at this time. I prefer to cover stocks that I actually have my hard earned money working for me already and are stocks that I will be continuing to buy in the month of March 2020, as well as during the market crash, collapse, decline, correction, bear market territory, next recession. You choose the words that you think apply best to the current market sell off that went last week and is possibly going into this week. As you see on your screen, my three stocks at this time are StarBucks, SBUX, Fiverr International, FVRR, and Penn National Gaming, PENN. Quick mention, as always, do not buy these stocks just because they are in my stock portfolio. I'm just showing you what I'm doing, and this episode is for entertainment purposes only, not financial advice whatsoever. Are these the best or top stocks to buy in March? Time will tell. All I know is that with the stock market going down, we are seeing many headlines such as why this stock market sell-off is scarier than 2008, stocks post worst week since the financial crisis, Dow, S&P 500 fall for the seventh straight day, stocks suffer biggest weekly losses since 2008. And then you have a headline like the stock market's biggest bear says S&P 500 just flashed a buy signal. The Dow Jones and S&P 500 are falling with the overall market. In regards to building one of my personal stock portfolios here, I'm watching the technicals, also known as chart reading, to decide when to buy more shares of a stock, especially at this time in the month of March with the discounts coming from the market panic. All you subscribers already know, I use fundamental analysis to formulate a bull thesis mainly in stocks I think have explosive growth potential, and then I build my stock investments positions by using technical analysis. I've already went over a few points about my bull thesis on Penn National Gaming and Fiverr International. I'll go over those briefly in this episode with some quick thoughts. First, Penn National Gaming stock, PENN, price popped on the Barstool Sports acquisition announcement. The stock hit $39.18. Looking at the metrics on my phone, I've continued to build my stock position to 28 shares at the time of this recording. With the biological crisis news hitting the headlines, I plan to wait on the sidelines and watch the technicals before I buy more shares of Penn stock. Mid to low 20s sounds great if I could get the stock that low. Why do I want the stock price to go down? Well, using logic, what do you think happens to revenue numbers in the short term for a business like Penn stock that's in the hotel and casino industry with a biological crisis spreading around the world with new facts coming out each day? I believe more and more people will want to stay at home if cases continue to spread here in the United States. My bull thesis in Penn stock is weighted heavily on the Barstool Sports app being a growth catalyst in the sports betting industry. I think Penn National Gaming will take market share from competitors like DraftKings and FanDuel. The app is still being created and is launching around August this year. If the stock price continues to fall, which I expect to happen with the latest headline news, I'll be building my position higher and higher as we get closer to the app launch date. Keep flushing out the short term investors who are panicking with signs of a crash, especially in March 2020. Did you catch my last flush out episode, episode 17? It was a good one. Next, we have Fiverr Stock, FVRR. I recently received an Instagram message from one of my subscribers yesterday. We had a great conversation about the stock market, especially since he is investing on the other side of the world over in Portugal. Yes, that's Cristiano Ronaldo's home turf. So his main question was, for example, Fiverr, is it still good to buy some? To highlight, he saw that my stock position in Fiverr is currently up 13.86% after reporting earnings back in February 2020. The stock price hit 35.11 and then sold off with the overall market last week. In past episodes, I emphasized that Fiverr is in a growing online freelance industry. When I think of Fiverr, I think of the next Amazon for freelance services. Everything is systemized and easy to use, which is what I like to see when it comes to businesses I'm investing in for explosive growth in the future. I believe Fiverr is a dominant company with a ton of growth potential compared to competitors. One competitor is Upwork, which is a website that is set up much differently when it comes to sellers matching with buyers to find gig work. Fiverr is a technology platform that allows any entrepreneur out there that's growing a small business and needs help with side projects like design work, video edits, Facebook marketing, Instagram marketing, and the list goes on and on. In regards to Fiverr being a good investment and to buy some, as asked in the Instagram DM, I'm not a financial advisor, and this channel is not intended to provide any investment advice whatsoever. What I could say are my personal thoughts and opinions at this time. There have been many past episodes where I have explained that I think Fiverr is in a great industry, and I believe Fiverr may indeed be one of the few companies that grow in a down market, bear market, or even a recession if it comes this year, 2020. Is any company truly recession proof? I don't think so. There will always be overall market factors that affect individual stocks, which are the kinds of investment vehicles I focus on. My Fiverr stock position is still very, very small at this time. Any signs of a pullback or sell off are welcomed since my stock amount is under five figures or $10,000 per position. Under four figures or $1,000 is still very, very small, and I'm still on hold with depositing large amounts of cash in this YouTube stock portfolio. I'll be leveling up with time. Remember, I'm just getting started, and these first couple of episodes are really to help out the beginners out there. On to number three, Starbucks stock, SBUX, my newest holding. My first dividend stock that I'm buying for my stock portfolio in March 2020 that will go hand in hand with my dividend strategy. In regards to overall portfolio management, I plan on buying dividend stocks to bring in passive income through dividend checks hitting my stock account. One share of a dividend stock is a tiny amount, but everyone starts investing as a beginner and needs to start building a stock portfolio from scratch. My bull thesis revolves around the Starbucks brand recognition. Between me and you, I enjoy Starbucks coffee every day when I wake up early in the morning prior to my gym workout. I like to get a little caffeine for my workout, and Starbucks gives me a higher energy compared to the pre workouts that I have tried in the past. Trust me, I've tried them all. With Starbucks in my system, I have a full energy during my entire 1 hour long workout session. Just so you know, I rarely buy coffee outside of my home since $3 to even $5 for a cup of coffee is a cash flow nightmare when it comes to budgeting and personal finance. Remember, this is an investing and personal finance channel, right? Think about it. $3 per cup of coffee times 365 days in the year is over $1,000. $1,095 to be exact. This year was a leap year, so add on another $3 for the extra day. If you're wondering which flavor I prefer, I buy a Starbucks Pike Place roast, medium roast ground coffee bag anytime it's on sale at my local grocery store, which is Publix. The cost breakdown per cup of coffee by doing it my method is much cheaper than $3 a cup, and it saves me money compared to my example of $3 a day for a cup of coffee. Rather than dishing out money to buy a cup of coffee at a local Starbucks location, I prefer money to hit my pocket every time I see someone holding a Starbucks cup in their hand. This could come in a dividend payment or as appreciation in the stock price. Small percentage of my bull thesis is for SBUX, Starbucks, is that I believe Starbucks is a global brand that is recognized like a company such as Coca-Cola. Comparing market caps, Coca Cola, is a $232 billion company, and Starbucks, SBUX, is a $92 billion company as I edit this episode. The great thing about global brands is that sales come from around the world, and brand recognition is usually a very undervalued aspect when it comes to valuation, in my opinion. How many other coffee brands come to mind? For me, when I think of coffee, I think of Starbucks. When I think of streaming movies, I think of Netflix. When I think of fast food or burger, I think of McDonald's. This is a highly undervalued aspect when it comes to brand awareness and longevity as a company into the future. Are there many competitors? Yes, of course. Will there be more competitors in the coffee business in the future? Definitely. Remember, I'm a long term investor and I believe a brand like Starbucks, which is a product I personally love, will continue to grow and expand around the world for the rest of my life. Warren Buffett is known for investing in strong brands that allow him to collect dividend income annually. I'll be following his investment philosophy with Starbucks in my portfolio. The goal is to build this position high enough so cash continues to fill my stock account with dividend income. As a dividend stock, Starbucks is perfect for my dividend investing strategy that will go along with my growth strategy as well. Who says I only have to invest in dividend stocks? I like to keep all of my investing options open at all times. Growth stocks, dividend stocks, recession proof stocks, it doesn't matter. The stock market is constantly changing, and I'll be staying on top of any individual stock that I understand fully and meets my personal investment goals. Another point I wanted to highlight is my social awareness research technique that I use online and offline. I mentioned this technique in earlier episodes. When I go to the mall, I always see a few stores that are really busy and have lines out the door. For me, I've noticed that Apple stores are always filled with people. Lululemon stores seem to be packed too, and many people are patiently waiting to enjoy their Starbucks coffee. Is that same for you in your local area? Whether they pay $3 or $5, it doesn't matter to me. $5 sounds better for top line revenue purposes now that I'm a part owner of every cup of Starbucks coffee that's sold around the world. Sure, I only get a piece, a very small sliver, percentage of those revenues through appreciation and dividends, but that's one aspect that I love about the company. You personally may think it's stupid to pay $3 to $5 for coffee. That's just coffee alone, right? People could buy other products there in Starbucks. But I think there's definitely a social aspect to holding that cup while you walk around the mall or any place you go for that matter. I believe holding a Starbucks in your hand is a luxury symbol. That's my opinion, right? Two examples are teenagers that wear those $250 Yeezys on their feet, or maybe women that carry a Louis Vuitton handbag. In later videos, I'll definitely get more in depth with the financials and metrics of Starbucks, like the PE ratio and the revenue numbers and the amount of store openings. That's the boring stuff that I personally love to review, but I'm going to keep those thoughts for future episodes. Remember, there are plenty of episodes in the pipeline to go over for more complicated things like technical analysis, chart reading as well. There's a ton to go over. Luckily, investors with short term minds are running away from companies that have exposure in China. Yes, I know Starbucks has store locations in China and around the world. We covered that, right? It's a global brand. Starbucks is not just a brand symbol in the United States. I haven't even scratched the surface with the growth potential in digital sales and delivery. My bull thesis revolves around the idea that America lives off coffee during weekdays from 9 to 5, and then another widely known consumed product on weekends. The name I have for that one is Happy Juice. Any guesses on that one? Let's end it there. My stock portfolio on your screen is a little over 2,000 bucks. Current gain is about $34. Remember, these stock holdings are still very, very small, and I have plans to continue to deposit more and more money into the portfolio. We are just getting started. Make sure to tune in for the next episode. I'll provide more insight about my stocks and potentially a few others on my research board, especially with many discounts appearing with the stock market crash that's occurred last month, may continue into March 2020. Any signs of a pullback are welcomed, in my opinion, since I'll be able to reduce my cost basis. As always, do your own research prior to making any investments. Read the disclaimer on your screen fully. Remember, all opinions in this episode are mine and mine alone. I'm not a financial advisor, and this video is for entertainment purposes only. Let's keep building from zero to infinity. Hold on tight for the ride. Peace.